everyone, it's your favorite SALTovation team, Meredith, Stacey, Alex, and Tram. Thanks for, listening, stopping in again today. And we were just kind of asking Stacey kind of how her most recent meeting with the Colorado Task Force was and kind of got us thinking about just as a prelude to legislative session starting, what states are talking about, thinking about what they might be doing, and just kind of noodling on some things that we could potentially see that could be new as legislators are going to start gathering soon, or just some recurring topics. So, yeah, Stace, if you want to give a 20-second shameless plug into your work with the Colorado Task Force,
right.
And then we'll just get going.
Yeah, sure. And there's a couple different task forces, probably more than a couple going on. I happen to be part of what's called, technically speaking, the Task Force Concerning Tax Policy. And so there's a group of about 21 of us, I think, from all different walks of life on this task force. And so we've been asked to look at certain items from a tax perspective for the state of Colorado, state only, not anything for locals. And so one of the things that tends to come up, as you mentioned, Meredith, and it's not unusual here for Colorado either, is potentially, and I use that word very strongly, potentially expanding the sales tax base. And Colorado happens to be one state where we don't typically at the state level tax a lot of services, and I use services as a big word because that means lots of different things. Because it could be, that we don't tax, professional services. We don't tax certain services related to the sale of tangible personal property. Now there are the cities that do differently, but again, I'm working with the state, and so that really did kind of open the door to the fact that we've got all sorts of different states that do tax services, different types of services. Tram happens to be in a state that does, Texas. And, I think one thing that maybe the viewers might not be totally aware of is that, even though Colorado might not tax a lot of services, we do have other taxes, right? We have property taxes, we have income taxes, we have all sorts of other types of excise taxes, we have all sorts of other taxes that apply. Whereas maybe a state like Texas or New Mexico, some of these other states, right, they're taxing more goods and services because perhaps they don't have other layers of tax. So Texas is an example that doesn't have a personal income tax. And so I think sometimes we see clients, taxpayers get caught up in the fact that, some of these states might look more favorable because they don't tax certain things or they don't impose certain taxes. But as we all know here anyway, the states are getting their money somehow. So, having said that, since we do have legislative sessions starting, I think we're going to see more states looking at different ways to raise revenue. And that could be, expanding a sales tax base. That could be, some other kind of tax that they impose, whether they can or not. And so those are just some things I think for people to keep an eye out. And we seem to see some of the same bills get proposed, year over year, and maybe they don't have any teeth. Maybe some years they get more teeth, they stall, but every year is a new legislative session, so we'll see what happens. So I don't know if there's, Alex is in Minnesota, Tram's in Texas, so I don't know if you guys have some thoughts on what your states might be looking at doing.
So, I'll start first. This is Tram from Texas. Generally, I think we see at least a few bills being introduced trying to expand the tax base, even though ours is quite, wide already. Like, we tax amusement services, we tax personal services, we tax, all kinds of data processing and information services. So we do have already a long list of services that many other states don't typically tax. So I would predict we would at least see a few more bills trying to expand the tax base for different reasons maybe. But like I see kind of the professional services creeping up again, and people really don't understand, right, ramifications of why that would be complicated and why that would be possibly bad tax policy. But I think understanding kind of what that means from a fiscal perspective is important. So I think legislators do look at that, and they do understand how much, revenue that could potentially raise for the state to fund really important purposes. But I do think that conversation does come up for us quite often. So that is something I think, at least from my perspective, I always try to raise that flag of, yes, it's important to pay for, the roads and the schools and all that, that we get to enjoy here in Texas. But at the same token, the complications of taxing a service like what we provide is really hard because, all the issues with sourcing and avoiding double taxation, right? Kind of those main critical things that, from a sales tax perspective, we want to avoid. We want to only tax the end user. So it gets really hard to really get it right. So I think that's one thing we'll see. And then the other thing I kind of have been thinking about is the cryptocurrency, because it is so new and it falls into that weird digital goods e-commerce kind of world where no one understands it, no one knows how to tax it. Our state tax systems really don't make sense, right? They're not written to account for, e-commerce and cryptocurrency per se. So I want to say, I would predict that there would be some bills introduced on those topics coming up.
Alex, any
really
insight from
have-
Minnesota that you're seeing with your work within the Minnesota Bar Association?
I'm not sure I have anything else to add. I think, I think Stacey and Tram have covered it really well. I think from our perspective here, I would say we're like a medium taxing state from a sales tax perspective. We don't have the widest base, but we do tax a decent amount of services, not as many as Texas. But we have a decently high tax rate. We have a medium wide base. Our income tax is pretty high. Our property tax is medium. But I feel like, I really got to give credit to the state here. I feel like we get a lot for our money. So I think maybe, when businesses are evaluating jurisdictions, they're not, maybe not look at each tax type in a vacuum, but look at what is being received for the overall amount that is being paid, because the jurisdictions have different levers that they can pull, right? They can pull a property tax lever, they can pull a sales tax lever, they can pull an income tax lever, and they can pull them to varying degrees to accomplish a desired end result, right? And they'll pull those levers depending on what's more politically advantageous to them, right? If raising income tax is unpopular, then they're going to pull a sales tax lever, or they're going to expand a sales tax base or a property tax base, right? They can manipulate that in different ways to accomplish a politically desirable result. So I think I think it would be a mistake to focus in on a specific tax type, other than for geeks like us, because we like to do that kind of stuff. But anyway,
Right.
that's all I got.
Right. Or just pick on like industry types, right? Like often marijuana, or like kind of sin taxes, candy, sugar,
Yeah,
pop,
absolutely.
or soda or Coke, depending on the region in which you are listening to this. Yeah, Colorado marijuana gets picked on a lot because people are like, tax marijuana at 30% and give it to the kids. So
Not marijuana,
always
the money.
the
Just to be
money,
clear.
right?
Just want to clarify that.
We're on video. We have to clarify it.
So yeah, lots of things that we can be looking out for, and maybe we'll do a couple of these and talk about what's interesting that has actually shown up, on Capitol Hill. So thanks everyone for, tuning in to another episode of SALTovation, and we'll catch you next time.
Take care. Thank you.